Hey, y'all. So I'm super excited to be able to share this information with you. It is our Colorado Springs real estate market update for June 2025. And there's some incredible data to start looking at. And the reason I'm doing it in this format this month is it helps to have visual aids sometimes. And the other part is whenever you get a recommendation from us, I want you to know that it is data backed. I take pride in studying the market to understand what is going on, even the little nuances, so that way I can make the best recommendation for you to achieve your home buying and selling goals, right? And so I share all the rest of this so that way you know how I look at the data that we have right here in our market. And for this data sheet here, everything was taken from the Pikes Peak Association of Realtors and our MLS that's there. And what you're looking at, I'm going to start left to right. What you're looking at is in the blue, that is the inventory levels, or I'm sorry, how many total active homes are on the market. So inventory levels. And then orange is the number of buyers and actual closed transactions per month. And then this green line, it is tracking the average price of a home over time. And so this I have starting in 2011, which was kind of the tail end of the 2008 housing market crash. And so that's part of this story. But if there's nothing else that you take away, know that home prices average in Colorado Springs is $490,000 today. And there is more inventory today, May of 25, than there was in May of 24. About 1,000 units. And so that has an impact on prices if you are a seller. Do not take away that you cannot sell your house in this market, because you absolutely can. If you price it right and you have a strong plan of how to get it prepared and then market it, you can sell your home. And the bottom is not falling out of the housing market by any stretch of the imagination. We'll look at those numbers too, because it all has to do with supply and demand, and there simply is not enough supply to meet the demand that's out there. Now, if you're a buyer, it's a buying opportunity. It is your market right now. Is it cheap? No, I don't think any home across the nation is really cheap. Anything that you, anyway, because you could see that over time how it's changed. But if you do have more leverage than you did in years past. So strap in, let's talk about it. I kind of geek out about this just because I love the numbers and I love sharing it with you. So if you have any questions at any point, throw them in the comments and I'm happy to address those. I'll call you, we'll do a Zoom call and we'll walk through it, because I want to make sure you understand where I'm getting the data from, how I'm interpreting it. That way you can make the best decisions for you and your family. All right, without further ado, starting on the far left, if you look, this is that 2011 time frame, and I'm moving my mouse around, talking about inventory being 4,700 units or so. Well, when people say, are we headed towards a housing crash because they see fluctuations in prices coming down? No, absolutely not. We're still well over 1,000 units away from that time right there. And you can compare that time also to the number of buyers that are out there. And so it's natural to ask, how did we get to that inventory level at that time? Well, it was builders overbuilding, right? There was no methodology. It was just pushing houses out. And we found ourselves in a situation where, again, too much supply. And so after that 2011 timeframe, builders kind of learned, they said, oh, we need to change our methodology. And you can truly see that as they started to pull back all the way through the pandemic, 2020, 2022 time period, which kind of really halted a lot of logistics and ability to build during that time frame. It just threw a kink in the whole supply chain, as we all remember. But then now we started creeping back up with supply. Now, that supply, there's multiple stories in here. One, you have, and I'm talking about the increase from 22 until now. One, this is overall a desired effect of the Fed, right? So when they raise interest rates, it makes mortgages more expensive. And when the higher price an item is, the less demand there is. And so, and then supply would end up increasing. We're seeing that play out right here in the numbers. Then going back again, 2011, we back here on the far left, Starting back over, we look at buyers. They're increasing. The number of buyers is increasing, and then kind of flattens out around 22. Why was that? We had lower interest rates. When you had lower interest rates, it made mortgages cheaper. And so then therefore there was more demand for housing. And whenever there's more demand, people were buying it up, drawing down the supply. And so we had way less inventory than we did buyers. And so then that's what got us into the bidding wars and drove prices up, right? And then this is where you see the inverse, right? These orange bars here without any of the blue behind it. Blue, again, is inventory levels. And the blue, you see, is starting to increase. And why is there an increase here? Builders are figuring out their methodology for selling. People that were sitting on their 2.5%, 3% mortgage rates, they're recognizing, okay, I got to make a change, whether it's for family, lifestyle, whether that's got to move for a job. People are making decisions to move out of those mortgage rates, and it's putting more supply on the market. What that does when there's more supply, buyers have more choices. And when buyers have more choices, especially when you look at May of 2025, it starts putting pressure on prices to come down, right? Because you as a seller, you're looking to get someone to buy your house. You have goals to move on and do something else. And how do you get them in? Well, you lower the price or provide incentives, whatever that might look like in your particular case. Because today's market is fundamentally different than what it was even 6 months ago, but certainly several years ago when people kind of got latched on to what their prices of the homes could be. The market, it's what the price someone is willing to pay today. And so you can hold on to it, but it is going to, and ask for a higher price, but it's likely going to either not sell or sit on the market much longer, in which case the longer a home sits on the market, the more people ask what's wrong with it. And then that ends up, it stagnates, right? And you end up lowering the price later on, back to where if you had just priced it that way in the first place, you would have had a higher likelihood of selling it anyway. And it's what's required in the market today here in Colorado Springs because inventory levels are higher. Now, one thing I want to show you, and it's specifically about these prices for sellers. We can see we peaked here in Colorado Springs in 22 as far as the average price was concerned. And then you see the cycle here, it drops in 22 all the way into 23. That's because mortgage rates were going up and people just kind of froze. And now they're getting used to it again. And so the peak here went from, and this is in 23, from that May time period all the way through the August-September time period. And then we see that play out again in 24. But here's what's interesting. Now, because there is more supply, and you see that with this line here, even compared to last year, now that there's more supply, prices have started decreasing in this April-May time period already. That's different than the years past. Years past, they continued to tick upwards until that August-September timeframe, and then it went down. We're experiencing that more quicker in this calendar year than we had in the past. I want to emphasize that does not mean that we are in a housing crash by any stretch of the imagination. There again, if you look at the supply levels compared to now to what they were in 2011, no, we're more than 1,000 units away from that. And so, and home builders are not ramping up to inject those homes into the market anytime soon. And they have no reason to, because they're being more methodical in how they build things. But what you're seeing is as prices come down, and I looked at the data, if you look at homes between 300,000 and 1.99 million, you will see that they came down an average of 2.5% in the April-May timeframe. We're seeing that in the data now as well as we plot this out. And it's going to be just like a stock, right? Every day, whenever you have a stock, prices go up, prices come down. Well, based on the perceived value that's there. Housing is the same exact way. Overall, the trajectory continues to go up, and in terms of a positive return on your in equity and what the value is. But there are little fluctuations on year to year. So that's why I always say time in the market, 4+ years, and whether that's you living there or you bought the house, you lived there for a little while and then rented it out, give yourself that type of time to weather any kind of ups and downs, because we are on a trajectory to continue to increase in price, not nearly as exponentially as it was years ago. It is more stabilized now, which is a good thing. It makes it more affordable for people to buy, in which the other trajectory we were on, it was unsustainable. And so the Fed is having its desired effects. We're seeing that right here in Colorado Springs. We have an increase in inventory. Buyers, if you're hooked on prices from yesteryear, a few years ago, it's not likely going to pan out for that. And this is why, the data that is underlying. Also of note, it is a buyer's opportunity right now as we speak. It is, you have more leverage than you have had in years. So asking for things like concessions, which is closing costs or buying down points for your loan, asking for a slightly reduced price, it is all in the realm of reasonable. In fact, I would argue more reasonable for you today, knowing that you're buying low in order to hold on to it for 4+ years and come out great on the other side. If you have any questions on this, I'd love to jump into it with you. I get excited about this because this is what informs my recommendations to you as a buyer or as a seller, so you can make the best decision for you and your family. Thanks. Have a good one.